So the ex-CEO of Celsius, the beleaguered crypto lender, has apparently withdrawn $10 million just weeks before freezing you guys out from withdrawing your funds. Yes, it gets worse, guys. We've covered off Celsius on this channel. We've covered off the whole disaster and how it's been unfolding. But now we get an update that Alex Mashinsky, after resigning, first he goes ahead and resigns, has now been seen to withdraw $10 million before the bankruptcy. This was back in May, with withdrawals then removed later on. We're going to break down exactly what happens. We're also going to cover off an interesting story with Kim Kardashian. She's been busted. We've also got some updates on what's going on in the UK in terms of the GBP movements, as well as some other interesting stories around Solana's outage as well. So smash up likes. Don't forget to subscribe. We're going to get straight into this one because, as you can see, Alex Mashinsky, I've always said he's been a bit of a dodgy one, guys. We covered this off. You guys know I never had any money in Celsius, but I did cover off the collapse for you guys that were affected as well. And again, heart goes out to all of those people who were affected, but hopefully, we can take this lesson to stop putting people like him on a pedestal. So what we can see here, he withdrew 10 million from crypto lender just weeks before the company froze customer accounts. So Celsius froze withdrawals on June the 2nd. They filed for bankruptcy in July with a $1.2 billion hole in its balance sheet. In other words, the assets were $1.2 billion less than the liabilities, what was owed to creditors, okay? They reached a peak of 25 billion worth of crypto assets deposited by customers who were attracted by the outsized interest rates Celsius offered. So again, guys, a reminder, I spoke a lot about this at the time, particularly with Anchor Protocol, who was doing this on the Luna network, and then also with Celsius. When you see these crazy APYs, like 18, 19, 20%, please understand that the majority of the time, this is rehypothecation, this is malpractice, and you want to be staying away from this unless you know exactly how the money is being created and you believe in that narrative. If you don't, and you're confused, and you don't understand how they're getting these APYs, it's probably too good to be true, as we've seen with both Terra Luna collapse and the Anchor Protocol, but also here with Celsius as well. Now, we then know that we had Alex Mashinsky decide to resign, right? He then resigned on Tuesday, so you can see the headlines were everywhere as he then decided to resign. But we also know that he was forced, right? He didn't do it of his own accord. He was trying to stay in there. He was promising till his very last breath that, wait, this is going to be for the best and we're going to restructure everything and everything is going to be okay. And he was forced out as everybody realized, hang on a second, this guy hasn't got a clue. And you should have known that from a while ago anyway. It was very clear that he did not have a clue. Anyway, so what happens next is the data will then be submitted in courts by Celsius in the coming days as part of a broader disclosure. So that's going to happen. But Mashinsky was saying he'd take that cash out to pay state and federal taxes, and that he's still got about 44 billion still locked in Celsius. Okay, fine. Look, what is the lesson from this? Lesson from this for us, as far as we're concerned, is when you see that you're getting these crazy too good to be true APYs, stay away. When you see mavericks like this going onto every single YouTube channel, pumping his project, and those crypto channels need to take responsibility for this, guys. A lot of them were following him blindly. If you just took a normal interview with him, that's one thing, and you were objective. But if you've been having him on every so often, giving him a platform when you're not giving other projects a platform, then we have to understand what is going on and why were you doing that? Why were you putting your audience in that position where you were talking about Celsius so often, even though it had crazy APYs, which I'm guessing you didn't even understand as well at the time. Here's the other thing that was worth looking at, an interesting tweet storm here by Kuroba. But the bit I want to focus on is the bit around, it was here that he says here, Mashinsky, are we going lower? My feeling is that we're not going to go to that 30,000 level. So this was taken from a keynote speech they were giving earlier on at one of the conferences. But in essence, what it shows is that Mashinsky and also Kyle Davies from 3 Hours Capital had this huge focus on Bitcoin returning back to 69,000. They never actually felt like when we were sitting there at those levels that we were going to fall any lower. And this just goes to show how badly run the show was, both at 3 Hours Capital and also at Celsius, and obviously in Voyager as well. How could you have not stress tested your platforms for huge 85, 90% retracements when you're in the crypto space? Traditional finance does this, and you're not doing this in the crypto space? How can you be one of the biggest crypto lenders out there and you've not stress tested for a real bear market, which has shown every time in Bitcoin there's a cyclical bear market where you get these huge retracements and you've not even stress tested for it? Insane. And I can't believe people like this are running companies like this, and I really do hope that the judge and those in charge can really make an example out of these people so that we don't have these mavericks coming across from traditional finance and using the lack of regulatory clarity in the crypto space to fraud people of their life savings. Right, we'll park that one there because otherwise I'm going to get even more agitated. Let's move on to something else which gets me agitated, which is the Ethereum killer Solana, right? Of course, the Ethereum killer. Now, complete transparency, Solana is something I was dollar cost averaging into. I was lucky enough to buy in the 25s ranges up to about $30, and then I benefited from a big rise in Solana. I did trim some profits, but the majority I left in and rode all the way back down to where we are now. Now, I'm actively not selling my Solana. I made a video about that, which I'm going to link up for you guys to go watch, but these number of outages are really getting me to a point where I'm annoyed. Now, when I talk about, having conviction in a project, these are exactly the kind of things that I'm talking about will damage your conviction. So a lot of people ask me, oh, with Phantom or with this project, when will you sell? This is the kind of place that I would be selling, absolutely. And I would have sold a couple of outages beforehand if I had a higher price point. Now, the reason I'm not selling right now is, one, it's not a critical part of my portfolio. I'm going to leave it in there, and I've got such a low-cost basis that, I'm not hurting right now. I'm not even in the red right now, really. So, for me, it's comfortable position. But if I was in Solana at any higher price point, I'd be a little bit worried about this. Yes, there's potential for this to go up and really prove people wrong and go to the upside, but that is not the type of project I want in my portfolio because it becomes a gamble. And I don't want to be sitting in gambles. I want to be in projects which are fundamentally sound, which have proven track records, and don't have downtime, right? So this was a huge issue for me in the Solana space. So definitely wanted to cover that off. Let's also get some news here on Kim Kardashian paying $1.26 million over crypto pump and dump. Yep, this is linking back to Ethereum Max, which she promoted for $250,000. Imagine, guys, for an Instagram post, she got $250,000 to promote this pump and dump Ethereum Max project. We also know at the time that there were various other influencers that were caught promoting this coin as well. And it's good that the SEC and Gary Gensler are going after these celebrities who are just trying to take money when they couldn't care less about crypto, and they're just throwing people to the wolves, so to speak. So good to see that is being picked up. Okay, now let's get on to the more serious stuff, guys. We've got to talk about this. This is Kwarteng, our new Chancellor of the Exchequer here in the UK, and he's decided to U-turn on his plan for the 45p tax rate for highest earners. So in other words, about a week ago, he decided to announce a whole bunch of new initiatives in his budget, which is what happens yearly here in the UK, and he decided to reduce the tax burden on those earning higher than a certain amount here in the UK. Now he's had to U-turn on it after public, outroar. There's been an absolute outroar here in the UK whilst we're in the midst of an energy crisis, and people are not happy with what he's proposing. So he's had to now go and publicly U-turn. And why does this matter for Bitcoin? I'm going to explain right now. So if we head on over to the GBP, you can see we're up almost 0.75% here, running into our EMA ribbon. This strength is allowing the dollar index to remain pretty flat today. Otherwise, you would have seen the dollar index climb, which would have been bad for crypto, but you're seeing it's being held here thanks to the strength from the GBP. There's still some weakness in the euro, okay? We still know inflation worries in the Eurozone is huge amongst the 19 countries in the Eurozone bloc. That is going to continue to cause issues. Now, for me, what am I looking at? I'm expecting these to continue to get rejected. Unless we show some real strength here by the GBP, thanks to the announcement, I'm looking to see if we get rejected from our EMA ribbon, because if we do, then all we're going to get is a bounce with vengeance here from the dollar index. And if that happens, I'm expecting more downside here on crypto. We can see Bitcoin is indeed up 1% today. If you sit here on the daily chart below our daily EMA ribbon, and it's a difficult period right now. I mean, the macroeconomic landscape is not great. If you've not watched my video, I massively urge you to go and watch that. I outlined the fact that we could be heading for something much worse than we previously expected. When we were monitoring how this was all playing out over the last year or so on this channel, we saw that this started off as just an inflationary issue, right? We've got some inflation. It could be transitory. Jerome Powell needs to squash it and bring it down. we're now evolving from just an inflation worry to now a recession, to potentially a deep recession / depression, to an all-out financial crisis similar to 2008. Yes, Credit Suisse are having liquidity issues where they're trying to raise some funds. There's a whole bunch of issues around their CDS, which is their insurance against defaulting, being at 14-year highs. Go and watch my video from yesterday because it is worrying. And that big trend is something I cannot ignore. Yes, we may get short-term moves. Yes, we may get a pump up towards 22,000. But what is the bigger picture here right now? The bigger picture here right now is I want to put my risk-averse hat on, and I want to be prepared for more downside. I need to make sure that if we're heading into potential financial crisis with liquidity issues, with banks struggling, with countries struggling and knocking on the door of the IMF, we have to be prepared. Now, I know it's early. I know I'm getting carried away with some of this, but I want to be prepared for it. I've seen it happen before, and I want to make sure that we are prepared for potential more downside. Being prepared for upside is easy. You just let it run. You dollar cost average, you be happy with your position. Now, one interesting thing that can come of this, which we need to talk about, is if we do head down that route, if we do head down this route where there is nowhere to put your funds, right? Really, you can't put your funds anywhere. You can't put them in Dow Jones. You can't put them in the S&P. I mean, let me put this into context. The last quarter, the Dow Jones was down 6.6%. These are blue chips. Down 6.6% on the quarter. S&P was down 5% on the quarter. NASDAQ down 4% on the quarter. Everything is getting slammed right now. There's nowhere to put your funds. I mean, you can put them in the US 10-year. That is the only thing that's been doing well, of course, as people have been flocking to the dollar. And we can see that the return is sitting at 3.6%. But other than that, can crypto stand up? If we do see a financial crisis where banks are struggling, where countries are struggling, could we see that Bitcoin stands up as an opportunity to say, hang on, we're the alternative. We're the whole reason why we're here. The whole reason we exist is as an antidote to the existing traditional finance ecosystem. Could it benefit from that? And again, this is uncharted territory. Bitcoin has not been through a severe recession. Bitcoin has not been through a financial crisis. We don't know how it will react, but I know I'd rather have my portfolio allocated now and hold through the turbulence with my conviction than to not be in the market, because there could be this decoupling moment where markets decide, hang on, Bitcoin is the antithesis. It's the best place to put some of our funds right now, and to diversify, we need to put some in Bitcoin and crypto. For that reason, I want to make sure I'm holding. Now, again, if you don't have the conviction to do so, you're going to struggle, because if Bitcoin falls to 15,000, 16,000, maybe even lower, 12,000, how will you react? Will you be prepared, or will you panic sell? That is the question. Okay, let's take a look at a few other indicators. Let's look at the VPVR, and you can see we're still at this critical level where the volume is being traded at. Again, if we lose 18,700, where this bottom of this channel is, which we've held so well since June, then we will be hitting some nasty lows. Volume becomes very thinly traded. Let's just pop me up there for a second so you can see very thinly traded volume after this green line here, and things can get pushed to the downside quite. Let's bring out, the Bollinger Bands, and you can see what's happening here is we are getting a bit of a rejection here from the center line of the Bollinger Band. Last time we bounced off the bottom, we ran to the top. This time when we bounce off the bottom, we've run to our center line and we've got rejected. So are we going to get some strength to run back up to that 20,000 level to head towards the top of the Bollinger Band? That's what we want to look out for. But overall, the trend continues to be with the bears right now. If we take a look here at this pattern, which we've been monitoring, again, I continue to hold the fact that I'm expecting to see, do we go test this 18,700 level again? And do we break to the downside? If we break to the downside, we could be going up for a retest before then trying to go even lower. This is the pattern I'm monitoring here on Bitcoin. Let's take a look here at our weekly EMA ribbon. As you can see, we're hugely extended from our weekly EMA ribbon. We've not touched it or got close for a very long time. I mean, since falling down from this stage here, we got our consolidation. We touched our 200 exponential moving average, but we didn't get close to the rest of our EMA ribbon here before then falling to the downside. So the bears are in massive control right now. I wouldn't be surprised to see, do we see a couple of weeks of strength, right? Just a little bit of strength. Still, the bears will be in control, but can we have a couple of weeks strength? October is typically a strong month for the equity markets as well. Could we see some reprieve here in October? One thing to remember is there's no FOMC meeting, which is a good tailwind for us. But from October the 15th, the quarter Q3 earnings will start to come out. So that's going to have a huge impact on where markets and therefore crypto are heading. So from the 15th onwards, we will be looking out for that data. Important to understand that there's a few other important things coming out this week. You've got a whole bunch of Fed officials speaking throughout the week. I wish they would shut up, but they are speaking. Hopefully the markets will just ignore them. We're beyond that whole inflation debate. We have to keep abreast of what's going on in terms of the Russia-Ukraine tensions as well. We get the ISM manufacturing index. We've got the non-farm payrolls on Friday, which is crucial as well. And there's an OPEC meeting this week as well. So lots going on, lots for us to pay attention to here in the markets. But the big thing we have to monitor right now is what is going on with these banks. What is the latest news around that? And I'll be sure to keep you guys updated. So smash up the subscribe button. Make sure you got the notification bell on, and I'll be the first to give you those updates. Hope you guys enjoyed. Don't forget to go watch this video here, and I'll see you in the next one.